Welcome to my weekly market roundup, 27th October 2019. I am Sagar Nandi, designer and developer of Q trading systems and techniques. I used to work in IT, mostly in Singapore. Now I have retired and I am living in Thailand. I am primarily a short-term trader, mostly using stocks and sometimes using stock options. My email ID is tradingprofitably@gmail.com. I share regular stock and market analysis in my traders forum sagarnandi.com, on my Twitter page twitter.com sagarnandi, and also the YouTube channel Trading Profitably. All of these are open to the public and you are most welcome to make use of them. Let me go through the disclaimer first. This demonstration is for educational purposes only. It is designed to share information on the trading systems and techniques I use. The information presented here should only be used by people who are aware of the risk inherent in trading. Past performance is no guarantee of future return. I am not an investment advisor. This session is not for any recommendation of buying or selling stock or any other instrument. I will have no liability for any investment decision made by the audience. As usual, today I will look at oil and gold using technical charts. They tend to impact related stocks. After that, I will try to look for potential trades using complete 360 degrees analysis. That is, trades where the market, sector, industry, fundamental and technical forces are aligned. I call those trades 360 degree trades, and they tend to be truly high probability, low risk trades. That was the last slide of the presentation. Now I will continue with the live system. I begin the commodities analysis with oil ETF USO, analyzing it with the weekly backdrop chart template and daily hop-on chart template. Together I call this at a glance template because using this template, only in a few seconds you can decide if there is a low risk swing trade entry opportunity at the right edge. In the previous market roundup, I explained how to take trades profitably in a sideways market. There I discussed that you may wait for the price to fall to the lower edge of the sideways range and then using a bounce setup or a box setup take a long trade. In that market roundup, I mentioned that you could take a long trade when price bounced up from this memory support line at the lower end of the sideways range. You could take such a reversal trade using short put vertical, and I mentioned in the previous market roundup that by the time price came here you already had a good profit. You could book profit at least on partial position and you could continue to hold remaining position. After that, price went up further this week. That would result in increased profit in the remaining position. What about now? Now the weekly backdrop candle color is bullish, cyan. The shape is also bullish. It is significant distance away from the next resistance memory trend line. These memory trend lines are automatically drawn, very smart trend lines. There is some distance to go before USO hits the next resistance in the weekly chart. In the daily chart, price is inside the triangle pattern, a very wide triangle pattern, right in the middle of the triangle pattern. When an instrument is in a sideways range like US oil is right now, and price is in the middle of the sideways range, there is no low risk trading opportunity, at least using the daily interval. For swing trading purposes, you may avoid taking any trade in US oil right now. If you took a reversal trade at the lower end of the range and you are holding remaining position, partial position of that trade, then you may continue to hold that bullish position. You may close the remaining position if price comes to the upper end of the range. Gold ETF GLD. In the previous market roundup, I mentioned that price was inside this triangle pattern and you might avoid taking any swing trade, directional swing trade. On last Friday, price broke out of the triangle pattern. However, it closed lower. It opened at the high of the day and closed near the low of the day. Still, it closed above the memory resistance line, resulting in a valid breakout. It has broken out to the upside in the daily chart. However, the weekly backdrop candle color is remaining bearish, magenta. The relative performance is tilting down, showing that it is underperforming the market. If price can go above the high of Friday, then you might consider taking a long trade. However, you might try to take that using intraday time frame. You may not use the daily time frame because the weekly backdrop color is still bearish. The two commodities, oil and gold, didn't give us any swing trade entry opportunity. Now I start with the highest level of the 360 degrees analysis, that is the market level analysis, starting with S&P 500 ETF SPY. S&P 500 went up this week. The weekly backdrop color is cyan and the shape is also bullish. It is very close to the weekly watermark resistance where bearish headwind had come earlier that led to a price drop. In the daily also, price is near the watermark resistance where bearish headwind had appeared multiple times, which could lead to a price drop. Because this is near the upper end of the sideways range, we are not going to look for any long trade right now, unless price can break out of the watermark resistance. Alternatively, if price reverses down from the watermark resistance, then you may look for a low risk shorting opportunity. S&P 500 ETF was very close to all-time high, and NASDAQ ETF QQQ has broken out and made a new all-time high this week. It broke out of the triangle pattern and also closed above this watermark resistance. The weekly backdrop candle color is bullish, shape is also bullish. Relative performance, this dotted copper color line is showing that it is outperforming the market. In the daily, it closed above the memory resistance and also this watermark resistance level, resulting in a successful breakout to the upside. For QQQ, if price continues to go up, you may look for a buying opportunity. You may do that in QQQ, or you may look for a buying opportunity in one of the underlying stocks that are fundamentally strong. Dow Jones Industrial Average ETF DIA, the relative performance line is showing it is underperforming the market. This week ended with a bullish shape and bullish color. However, it had a very narrow range candle. In the daily, price is still inside this white triangle pattern. It is right in the middle of the triangle pattern. You may not look for a directional swing trade in DIA right now. Russell 2000 ETF IWM. The weekly backdrop candle color remained bullish. The shape is bullish, you may say. It has a hollow body, though it has equal sized upper and lower tails. It closed above this memory resistance line. However, there are other memory resistant lines nearby. In the daily, it is still inside the range, somewhat on the upper side of the range. You may not look for any long trade right now. This week on Monday, price opened with a gap up. Since then, it moved sideways. Out of the 5 days, 4 days, that is Monday, Tuesday, Wednesday and Friday, ended with an upper tail. That is showing that the closing is not as bullish as it could be. You may avoid taking any long trade in IWM. That was my market level analysis, the highest level of the 360 degrees analysis. What did you see? Out of the 4 market ETFs, NASDAQ ETF QQQ is the strongest. It broke out successfully and it made a new all-time high. QQQ is followed by SPY. It is also very close to making a new all-time high. SPY is also bullish. QQQ and NASDAQ are followed by DIA and IWM. For DIA and IWM also, the weekly candle colors, backdrop color, is bullish. They haven't broken out. They are not so close to making a new all-time high, but still they are bullish. Overall, the market level analysis shows that we are in a bullish phase and you may look for only long trades in this market. Let's see what conclusion can we arrive at from the next level of 360 degrees analysis, that is the sector level analysis. Sector level performance. Here I am looking at the 11 sectors across 3 review periods over this week, the previous week before that, and 2 weeks before that. Together, they represent 1 month of sector performance. Any bar coming to the right of the zero line shows the sector went up. Any bar to the left of the zero line shows the sector went down. This week, all the 11 sectors ended in the positive. That is showing bullishness in the market at sector level as well. The best performer is energy. It went up by a very large 5.91%. In the previous week, it was down significantly, and in 2 weeks prior to that also, it was down significantly. Energy seems to be turning around. This was the sector performance 1 week ago. There we had 4 sectors down and 7 sectors up. Clearly the current week became more bullish at the sector level. The sector performance graphs can show you how the sectors are changing from week to week. However, this sector rotation is much clearer from the sector scorecard and heat map. Here I am analyzing the 11 sectors across 12 monthly review periods and then more frequently over 10-day, 5-day, etc. Cyan color represents strength, magenta represents weakness. The heat map instantly shows us which sectors are strongest now. Over 5-day period, that is the current week, energy and industrials are strongest, utilities and healthcare are the weakest. Energy was one of the weakest sectors. In fact, it was the weakest sector for many review periods. And this week, it became the strongest sector. The base column shows acceleration. Again, cyan is strength and magenta is weakness, that is deceleration. From the base column, you can see energy is the most accelerating sector as well. Strongest sector as well as most accelerating sector. If I open up the most recent periods, 2-day and 1-day periods, you can see that over 1 day, that is Friday, again energy was the strongest as well as the most accelerating sector. Energy sector may be turning around, and if you look for buying opportunities in energy sector, you may be able to catch some fundamentally strong stocks at the very bottom. That will be a top-down analysis. Let me drill down into the energy sector. Out of the energy sector industries, the strongest over 5-day period are these two: oil and gas exploration and production, and oil and gas refining and marketing. These two are the strongest over 5-day period and holding on to their strength over 2-day as well as 1-day periods. Let me drill down to the stocks of these two industries. We have a large number of stocks in these industries, as the energy sector and these industries were also weak for a long time. It may be a good idea to look for undervalued stocks. These are the stocks where the valuation column is in cyan color. I'm going to apply the smart filter to focus only on the undervalued stocks. This is earnings season and several of these stocks have earnings nearby. These are the stocks where the next EPS date column has shaded background. To avoid earnings uncertainty, let me focus on the stocks that don't have earnings nearby. I am left with 3 stocks. Out of that, only one stock, SWN, has robust earnings quality. This is the stock I may focus on for a possible buy setup. From the percentage change columns, you can see over 5-day, 2-day as well as 1-day period, it is steadily going up. It is far below 52-week high and somewhat above 52-week low. What did I do? I started with the market level. From market level analysis, my conclusion was that market was overall bullish and I was going to look for only bullish trades. Then I looked at the sector level. All the sectors went up this week and energy was the best performing as well as the most accelerating sector. Bullish market, therefore I was going to look for long setups. In which sector? Energy, because that was the strongest and the most accelerating sector. I drilled down into the energy industries, found 2 of the strongest energy industries, further drilled down into the underlying stocks, looked for undervalued stocks, looked for stocks that are not near earnings, looked for stocks that have strong earnings quality, and ended up with only one stock, SWN. This may be a good buying opportunity provided the technical charts is giving a low risk buying opportunity. This is SWN using the standard weekly, daily at a glance template that I use to decide if there is a low risk swing trade entry opportunity at the right edge. In the weekly chart, after a long decline, the backdrop candle color has turned cyan bullish for several weeks now. It is still inside a triangle pattern. If price can break out of the triangle pattern, that will give a low risk entry opportunity in this stock. In the daily also, it is inside a triangle pattern. It broke out of the first memory resistance trend line. There is another memory resistance nearby. If price can go above that memory resistance, that second memory resistance next to it, then you may look for a buy setup. Interestingly, the bullish headwind reversal signal could catch the almost very bottom of the stock. Now the weekly is bullish and daily is also bullish in terms of candle color. If it breaks out of the memory resistance, you may look for a breakout trade. And that is in sync with what the market is doing. QQQ has broken out. SPY is about to break out to all-time high. That is the time you may favor breakout trading opportunities. And SWN may give a breakout trading opportunity in the long direction next week. It is a stock that is fundamentally strong in an industry that is very strong now, and the sector is the strongest. This is what I call a 360 degrees trading opportunity, where the forces from market, sector, industry, fundamental and technical levels are aligned together. That was an example of top-down analysis, where you look at the market level first, decide whether the market is bullish and bearish. If bullish, then you look for strongest sectors and industries, fundamentally strong stocks, and then look for technical buy point in those stocks. You may also carry out a bottom-up analysis equally effectively. Whatever be your approach, top-down or bottom-up, finally you would like to align the forces from all the levels: market, sector, industry, fundamental and technical. I showed that QQQ broke out and SPY is about to break out. When the market is breaking out, you may look for breakout trading candidates. How do you do that? You can run a scan for long breakouts, stocks that are breaking out in the long direction, and to add further strength to the breakouts, you may look for stocks that are going up with extreme bullish pressure. Q pressure, extreme bullish. You may run these two scans on any list of stocks of your choice. Let me run it on a list I have created of 324 USA stocks that also have liquid options. The stocks are liquid and the options are also liquid. I have selected two explorations and I'm going to run them on this list of 324 stocks. I want to run them in a waterfall model, use the results from preceding exploration. Therefore, I will execute the long breakout scan first and the output will be fed into the next scan, that is to find stocks with extreme bullish pressure. I am running the two scans now on live data. This middle panel is showing the progress report. The scans are complete pretty fast, isn't it? The first scan ran on 324 stocks, found 32 stocks matching the long breakout criteria. These 32 stocks were sent to the next scan, and that scan, extreme bullish pressure scan, found only 6 stocks. These are the 6 stocks, and I may now look at these stocks one by one using technical charts. First of the resulting stocks is Caterpillar CAT. It is nicely breaking out of the memory resistance in the weekly as well as in the daily chart. The weekly backdrop candle color and shape both are strongly bullish. Friday's candle color and shape are also strongly bullish. This is giving a valid breakout just at the time that market also seems ready to break out. To make it a 360 degrees trade, we would like to see if the fundamentals are good and if the industry is strong. We can find out about the fundamental strength easily from the fundamental peer analysis tool. Caterpillar belongs to construction, machinery and heavy trucks. Let me look at its industry strength. The industry is looking strong. It was weaker earlier, and in recent periods the color, the industry scorecard and heat map color is turning cyan, showing that it is strengthening. The industry is telling us that it is okay to buy Caterpillar. Fundamentally, from the snapshot, you can see that the valuation is optimal. Over yearly periods, it has robust earnings growth. Though over the recent quarters, there is negative earnings growth. Overall, it is looking bullish. Valuation is undervalued. It has yearly earnings growth. It has yearly revenue growth as well. Over 1 day, 2 day, 5 day and 10 days, it is steadily going up. On Friday, out of 19 peer stocks, 16 went up. That is also showing overall bullishness of this industry, construction, machinery and heavy trucks. Therefore, Caterpillar is giving a valid breakout setup. Technically, it is fundamentally strong, undervalued stock. It is in an industry that is strong as well. That is giving us a 360 degrees breakout trade candidate. Let me go through one more stock from the list, that is Vail. The weekly backdrop candle color is bullish and the shape is also strongly bullish. In the daily chart, the bullish headwind reversal signal could catch the very bottom. Then it was inside a triangle pattern. On Friday, it strongly broke out of the triangle pattern with bullish pressure. It had a gap up open, and from open price went up further, closing near the high of the day. This is giving a valid breakout trade setup on technical charts. What about fundamentals? Let's find it out. Doing a fundamental and peer analysis of Vail. Belongs to steel industry. How is the industry? Industry is looking strong. It was weak for a long time. The scorecard color was magenta, and then over 5 day, 2 day, 1 day periods, the color has turned cyan. This is also giving us a turnaround candidate in terms of industry. An industry that was weak and just now starting to turn around. What about the fundamentals? The stock is going up steadily over 10 day, 5 day, 2 day and 1 day periods. On Friday, 14 of the 16 stocks in the iron and steel industry went up. In terms of valuation, it is looking great. Undervalued stock has robust earnings quality and also a short squeeze potential. Earnings growth in the latest periods are also strongly going up. Fundamentally, it is undervalued stock with earnings growth. Technically, it is giving a breakout trade candidate and the industry is strong. Value is therefore giving another 360 degrees breakout candidate. Value is not the only steel stock that is giving a breakout trading opportunity. I share trading ideas regularly in my traders forum open to the public, sagarnandi.com. On Friday, I shared an analysis on US Steel. This was the post. US Steel, ticker symbol X, may be breaking out from a low level. As usual, I shared the 360 degrees snapshot as of the time I posted it. I shared it on Friday. The steel industry showed strength as of Friday. I shared it at around 11 a.m. Eastern Standard Time. The industry was turning around. In terms of fundamental, X was also looking strong. Over multiple review periods, it was steadily going up. Most of the stocks were up on that day in this industry, steel industry. It was undervalued stock with a short squeeze potential. Fundamentally, you could look for a buying opportunity because it is undervalued. And technically, this stock was also breaking out of the triangle pattern, breaking out of the memory resistance line. In the weekly also, it was breaking out of the memory resistance line. Therefore, X in the steel industry also gave a potential breakout trade setup and a trading opportunity that is 360 degrees trading opportunity where the industry fundamental and technical strengths are all aligned. You may find more such 360 degrees trading opportunities from my traders forum sagarnandi.com and also on my Twitter page. Let me summarize now. The market is bullish. All the 4 market ETFs went up. Their weekly backdrop color is bullish. QQQ was the strongest, followed by SPY and then DIA and IWM. When the market is bullish, you may look for only long setups. In what sector industries which are also strong? There are probably several sectors and industries that are strong. Materials is one of them. As a sector, it is strong. And if you drill down into the material sector, you could find steel industry is getting stronger. It was weak for a long time. You could look for breakout trade candidates in steel industry and you would find at least 2 360 degrees trading opportunities, that is VAL and X US Steel. You could look for such opportunities using bottom up or top down approach as I explained. Another sector that is now going up is energy. It was the weakest sector for a very long time. Now it is not only the strongest sector but also the most accelerating sector. This is also where you may look for a buy setup. You would prefer to buy an undervalued stock. Here you could find at least one buying opportunity, SWN. There may be other stocks also that are giving a low risk buying opportunity at the very bottom. Whatever be the market condition, using the 360 degrees analysis, you can always find low risk and high probability trading opportunities where the sector, industry, fundamental and technical forces are aligned. That is all that I plan to share in today's session. Thank you for attending. I look forward to seeing you in my next session. Have a great week and trade profitably.